Now let's understand the practical application of this competitor workbook. So this is the workbook as we have seen before, and here I have changed the names of the old data and new data to 8 August and 22nd February. So this is a summarized version of a portfolio investment between two dates. So this is 8 August 2018, this is 22nd 2019. So if we go to developer tab and go to our main code, which is the third code module, I have changed the dates accordingly. As you can see, the first sheet name is 8 August 2018, so 8 Aug 18, and the new data sheet name is 22nd Feb 19. So accordingly, if you see here, the names has been changed. Variance are kept is same and other things are kept is same. Now this is a summarized version of portfolio. It has a various columns. So it has a unit spot for the mutual fund. So this is a mutual fund investment portfolio on a different date, the position, unit spot, then average purchase price, sum of purchase value, current value as on market, and CAGR rates. So compounding annual growth rate, sum of gain so far, accumulated gain, average holding period, and average holding years. So this is the summarized data, same kind of structure of data as of 22nd Feb. Now I want to see the variance between these two data sets with the help of our competitor workbook. So I'll go to variance and let me clear the existing variance. And let's compare the sheets. And as you can see, the variances. So these are the new schemes of mutual fund which has been added in the portfolio as on 22nd Feb 19 compared to 8th August 18. And these are the changes. Of course, it's a market link investment, so there would be changes. And as you can see, many changes, almost all are the changes here, because stock market changes almost every day. These two schemes have been deleted from the portfolio. We have copied the data accordingly here. As you can see, new data rows. So these rows have come here, as I explained before. Deleted rows are only two. As you can see, there are only two schemes which have been removed as of 22nd Feb 19 compared to 8th August 18. And change, these are the scheme where there are changes at cell level. So this is the one of the key strength of this competitor workbook. As I explained you before in the earlier lectures, where you can use R programming, you can use formulas, you can use VLOOKUP, you can use Python, SQL, but you cannot get this kind of cell level variance analysis. So this is the strength of this competitor workbook using VBA code. These are the only changes cell which has been copied here. So that doesn't give any kind of meaningful analysis. So for that, what I have done, I have copied this particular format and link this change data rows here. As you can see, these rows have been linked to this change data row sheet, as you can see here. And now I'm comparing row wise each cell. So for that, I'm comparing what happened actually in this particular scheme. So these particular schemes of portfolio are existing in the both dates, right? So 8th August these schemes are there, also 22nd Feb these schemes are there. Now I want to see exact changes which has been generated by this particular macro, and this particular rows have the changes. Now I want to see what exactly are these changes. So to do that, you take this particular scheme as a lookup column. So I just applied a VLOOKUP function, as you can see here. So I'm looking up A for this particular scheme name, and I'm going to the old sheet, selecting entire data set with the help of VLOOKUP as a table array, and against that I'm comparing this particular data for the same scheme. So if we come back to analysis, Parag Parikh long-term equity fund, I'm comparing its situation as of 18 August and 22nd February with the help of this particular lookup value. So this is just a difference between these two. So let's understand what it is 1571 means. So if you go to 8th August, let's find Parag Parikh. The total units were 624.87, and we go to 22nd February for the same scheme. As you can see here, the units are 2195. Now I'm trying to find the difference, and that would be the increase in the unit. So 2195 minus 624.87 will give us 5171 units. Similarly, same formula has been applied with the help of VLOOKUP for all these rows and records. and all the cell level analysis has been done. This overall increase in number of units bought between these two dates is 4247. Average price has changed so far, it has increased. So overall average increase is 2.28. Purchase value of course increase, so there is a purchase of 180,000 units in between these two dates, as you can see, and the current value has gone down for each scheme, as you can see. So you need to look into this portfolio and try making some changes in the scheme. Similarly, there is a high reduction in the CAGR, which is a negative sign for this portfolio, and something needs to look into and change the schemes accordingly. Similarly, sum of gain has also gone down between these two dates. Average holding period has increased, obviously, because this is a periodic data, and similarly this has increased. So this is a very brief example what you can do with competitor workbook. So each cell level variances is a key in any kind of analysis. So this is the strength of this workbook. As you can see, we were able to do this kind of powerful analysis quickly, and now we can go back to the portfolio manager and ask what is really going on with our investment, and if there is required any changes, we should do it immediately. Now in the next video, I'll be going through a very comprehensive example of preparing a dashboard for the payroll. So we'll be going through a comprehensive payroll data between 2 months and try to investigate the variances at very detailed level with the help of competitor workbook. And also in that particular workbook, I'll show you how you can enhance this particular sheets to work in a dynamic manner. So whenever there is a new data added, it automatically works. So I won't be teaching you each and every component and formula, how to write the formula, because this is not an Excel formula course, but I will try to give you a modeling approach which you should follow to make this particular competitor workbook a dynamic solution for comparing your data. So we'll see that in the next lecture. So thank you very much for watching, and I'll see you in the next lecture. Thank you.